Alright, what's up, y'all? So look, today we got that first trading strategy, okay? And so it's called shark fin out of water. Or some people just say shark out of water. It don't matter how you classify it. But yeah, so whatever. TLC, table of contents, yada yada yada. You know the deal. So first off, what is the TDI? So to be trading this, we're going to be using a thing called the TDI. And yeah, whatever. So what is the TDI? The TDI stands for Traders Dynamic Index. It's a 3-in-1 indicator, meaning there's three indicators merged into one, creating the TDI. Creating just one complete TDI. And the indicators involved are the RSI, Bollinger Bands, and moving averages. Okay. And so yeah, so right here you can tell what they measure, whatever, yada yada yada. So how to read the TDI? So first off, let's identify what is what. Right here, this green line right here is the RSI. Okay. The red one is a moving average. The blue Bollinger Bands 1 and 2, thing 1, thing 2. Okay. Are blue, and the yellow market baseline right here is yellow. And as you guys probably noticed, over here we talked about just 3 of them. However, the market baseline is basically the RSI line, which it is, but there's a difference basically. Okay, so look, so this green one measures the candles. Kind of, the creator said he didn't want to kind of associate them like that. However, each and every green line that appears is right after a new candle, so we're just going to classify it as the candles. And so this yellow one, this measures the entire trend of the market. Okay, so the green is for just one candle or just the candles. The yellow is for the entire market. Okay, and so down here you can kind of see that. Okay, overall market sentiment, current price sentiment. Okay, current price per candle, overall the entire thing, yada yada yada. Okay, and so down here you can kind of just tell what these things do and how to use them. Okay, basically. So we won't be talking too much about like the TDI because there is multiple trading methods with it, and there's a lot of good stuff that happens with this indicator. Now this one it's a very powerful indicator for like price action and things like that. And so yeah, we're going to be using this a lot. And this one, this mug hit. Okay, you feel what I'm saying? But anyway, what is a shark fin out of water? So whenever the green line, the green RSI line, leaves a blue Bollinger Band either up or down, above it or below it, and then it curves back inward into the same Bollinger Band it just broke, and also crossing the red moving average, is when you can tell that's a valid shark fin out of water. However, there's shark fins out of water that don't cross the red moving average. Okay, and so these are kind of fake outs, and we're going to be talking about all of that stuff later, whatever. But yeah, so right here, as you guys can see, we have 2 blue lines. Okay, the Bollinger Bands. Okay, and so we're going to classify this one as water 1 and then water 2, or thing 1, thing 2. Okay, and so as you guys can see, the green RSI line breaks above right here, whatever, yada yada yada, doing this thing up here. The shark got a little hungry. They came back down, and I guess midair it caught a fish, I guess, jumping out the water too. And yeah, and so came back down with it, yada yada yada. Hey, sleep time. I don't know what sharks do, but just come back down like, oh, hey, hold up. Hey, hold up. You feel what I'm saying? The ones down below ain't safe either. Okay. But anyway, yeah. Also, what I want to talk about are these numbers right here to the side. So, like I said, we won't be talking about the TDI today. Well, we kind of are going to be talking about the TDI because you need this indicator for this method. But anyway, yeah. So we're going to briefly go over some things about it, okay? So as I stated, whatever, the red line is for signals. Once it crosses the red line, you know when to enter or exit. Say you got in on a buy down here, went up, and then it crossed right here, you can exit, okay? Basically, just know that there's more in depth to it. However, right now I'm just going over it briefly, okay? Now, each and every time it crosses over, that's not an entry or an exit, okay? Like as you guys can see right here, comes up, it doesn't really go anywhere, consolidates and then shoots down, okay? So there's more to it than just, you know, as soon as it crosses this line, you know, I'm about to give me some money, okay? You know, the new Chanel is on the way. No, it's not, okay? But yeah, so whatever with the red line. Next we have the green one. As I stated, it measures price, you know, per candlestick, whatever, you know, it moves with it. Market baseline, you know, is the bigger picture, you know, the overall, you know, trend of the market. And so these blue lines right here, these measure volatility, or, you know, just whatever. So if they're wide and spread out, that means the market is moving. If they're kind of, you know, tight and squeezed, it's kind of, you know, going sideways, not moving too much. There's no clear uptrend or downtrend. It's just, you know, consolidation back and forth. Okay, now once it like poofs up and inflates like Miss Puff from SpongeBob, whatever, you know, it's moving. So, you know, it's a very liquid market. Feel what I'm saying? Now I want to talk about these numbers right here. Okay, so these numbers represent, you know, just kind of where price likes to be at, okay, or, you know, turn around at, you know. So up here to 68, at the 68, price likes to, you know, kind of, you know, just turn around sometimes. You feel what I'm saying? Turn around, come back down. 50, you know, chill out. Now this 50 right here is where price wants to be, because price wants to be balanced, you know, just like almost each and everything out there in the universe. It wants to be balanced, you know, have that perfect flow. So price typically wants to, you know, come over here and chillax, okay? But sometimes, you know, in life you can't be balanced all the time. Sometimes you might get a little excited and go all the way up. Sometimes you might get depressed and come all the way down, okay? However, you won't be there for too long before you find balance again, okay? I feel like Ira from Avatar. Hey, hold up. So yeah, so typically at the 68, price wants to, you know, turn around, whatever, and then chill down here, maybe sometimes, or maybe you might turn around and they come all the way down here and chill a little bit, then shoot up. Now these are kind of, you know, just price exhausting points or whatever, to put it simply. Now there's levels above it. Sometimes this motherfucker shoots up to the 90. Now that's not always, you know, going to happen. That's pretty rare. Sometimes it might get up to 80 or 75 or, you know, something like that. Just know once it's above, you know, just something like a 68, it's pretty much going to, you know, fall down sometime soon, okay? And same down here, you know, if it's down there at like 10, 12, something like that, you know, it's going to shoot back up, okay? Because it's unbalanced. And this market is based off of foreign currencies. They'll mess the world up if they just continue to shoot it all the way up just because, or, you know, shoot it all the way down just because, okay? Now I think I got an example. Yeah, example right here. So as you guys can see, price is, you know, chilling like a villain, and right here also is squeezing a turd. Okay, so that's a trading strategy that we're going to be, you know, learning about later on. But it's called the TDI squeeze, but I like to call it TDI squeezing a turd because, you know, it's kind of funny. But yeah, so it breaks out, whatever, and as y'all can see, like I said, it's a squeeze. Price isn't really showing an uptrend or downtrend. However, it breaks out, comes back in, and y'all see these two blue lines just kind of fan out. See it? And once it's starting to fan out, you can see that price is on a clear uptrend, okay? So yeah. So anyway, oops. Anyway, I got it all right here. Okay. So, ooh, these, I ain't gonna lie, these fonts ugly. Okay, I'm sorry, but anyway, the green line leaves one of the two blue lines, creates that shark fin, and then crosses over, and then it's blood in the water because the shark is attacking or eating whatever it got out here. And so up here it's chilling, and as you guys can see, it goes up. Okay. So how to trade it properly with proper confirmation. So number one, typically we would like to see a strong RSI pushed outside of the water. Okay. Right here, you get that strong, that Hercules, right there for you. And then, RSI line, whatever, curve back inward into the water. Okay. So as you guys can see, comes out, creates that shark fin, and then, whatever, comes back into the water. And then you also want to see a key reversal candlestick pattern. For example, railroad track, a star pattern, shift candle, quarter wood, MOW, or an engulfing candlestick pattern. Now there's more patterns out there, however these are the ones I want you guys to know right now. I also have some advanced candlestick patterns coming out, a video on that coming out soon. Anyway, yeah, so as you guys can see right here, what do we have? We have a shift candle. Okay, now this candle is 10 to 15 pips. A shift candle is 10 to 15 pips. There's some that's just way more than that, and I also pre-recorded the video of me going over this in live time, going over the fake outs and everything. That's going to be part 2 to this video that I'm going to drop soon or whatever. But anyway, yeah, so whatever, we have a shift candle right here, and then price shoots up. Now with this method, don't always look for it to just go crazy like this, because 9 times out of 10 this mug ain't about to go crazy like this all the time, especially if you're trading against the actual trend of the market. We're going to be talking about this later on. Just trends and how market makers do stuff and how the market works or whatever. But yeah, whatever. We typically would want to use this for a scalp. Now, as you guys can see, there's ways for you to use it to get in big moves like this. It's basically trading the low of the day. Okay, the low and the high of the day, and so that ties in with what I'm going to be showing you guys later. But anyway, yeah, so typically we want to see just a 10 to 15 pip return. And so that's called scalping. Okay. So what scalping is, you basically take small moves out of like the big moves. Okay. Now some people like to do 10 to 20 pips. That's cool and all. However, with this method I don't recommend it. You can, because sometimes it'll give you like way more than 20 pips, or 20 pips. However, just be safe and get you some quick bucket at bucks, bruh. Just go ahead, put down that 10 pip, that 15 pip. It don't matter. You feel what I'm saying? Just don't be greedy. Just get what you can, bro, and dip out. Okay, and come back tomorrow and guess what? Get some more. Okay, you feel what I'm saying? But yeah, so and then lastly, a cross between the green RSI line and red moving average. So a quick rundown. Oh, I would say one rundown again. Shark leaves the water, curves back up, creates a shark fin back into the water, also crossing that red signal line. And then look right here, a key reversal candlestick pattern, and then you on your merry way. Okay, entry would have been right here on this candle opening, and you would have been in drawdown a little bit, but shoot, it shoots up. Okay, now you're going to have some shark fins that come out strong like this. And that's why I said we typically want to see a strong shark fin, push outside the water and then back into the water. Like this one right here, it comes out, but it don't come out. You feel what I'm saying? Now this one, this is a fat lazy. Well, I ain't gonna say fat lazy shark, but it's kind of up there and just laziness. But this one right here, this one of them young athletic, LeBron James, shark fins right here, bro. But anyway, also like I was saying earlier, I have it pre-recorded of me talking about this on like a live chart. I'm going to explain, fake outs, how to trade it properly, and just why you also just want to use this for a 10 to 15 pip move. Because look, right here, strike comes out of water, yada yada yada, key reversal pattern right here. Okay, engulfing or railroad, it doesn't matter which one you want to classify it as. Right here, also right here, you get another railroad, basically right here as well. But comes out the water, back into the water, right here, right? However, it doesn't cross the red signal line. That's what we're looking for. Comes back up, right here. You know what I'm saying? Now notice that it's kind of like already all the way down here. That's because this candle right here is already closed. If you would have got in right here, it would have moved right here, and then on this candle it would have made that curve upward. Okay, so yeah, this one shut down. I think it was like 21 pips. I think I'm talking about it in the video and everything, but yeah, so whatever. Oh, that's all. Okay, so I can actually talk some more. Okay, so yeah, so it shot down for like 20 some pips, whatever. But like I said, you want to look for 10 to 15 pips. Now, also I was talking about why you don't want to hop in right here and everything. Yeah. Okay, so that's it for part one. I might merge part one and part two. I might not, depending on how long this video is. So yeah, so thank you for watching. Yada yada yada. Get out my face.